Today is August 4th, about 8 a.m. on a Sunday. The markets, wow, what can I say about this week? As you can see from the chart here, we had a top sometime in mid-July, and since then it has been somewhat of a struggle. In the past, I've spoken about this green line, which represents the 20-day exponential moving average. This is the line that I use to kind of determine where we are in the market. So if this blue line, which represents the price of QQQ, if it's over the 20-day exponential moving average, this green line, then to me it's a rising market. Everything is okay. If it's between this green line and the red line, which represents the exponential 50-day moving average, then I'm somewhat neutral and prepared. And if it's under this red line, which is as I said before, the exponential 50-day moving average, then watch out below. Be careful. And this is where it's been at since the end of July. We broke through the red line. We've been struggling. We tried to make a move. I believe this was last week. We tried to make a move up. It hit the red line. And this past week, we see it reversing further down. Right? So hopefully it looks kind of like this one, where it goes up below and then buyers come in to buy back some stuff. Hopefully it looks like that. But potentially it could look like this one. Of course, back then this didn't look like this. This was a little further, where it comes down to meet this yellow line, which is the 200-day exponential moving average. If it hits this line, then things are going to be pretty bad. But we'll see what happens. Anything could happen at this point in time. The big boys, except Nvidia, reported this week. Amazon got hit pretty hard. I think Apple got hit a little bit as well, but recovered. So we'll see what happens. I mean, it presents a buying opportunity, but for me, not just yet. The only time that I will buy is when I see the price back above this green line. So for instance, if we look back at what happened in the past year, it cut through the green line, it cut through the red line, it went down for a little bit, and then this is maybe a month later, it tried to get back above this green line, and this is where I would probably have made a rebalance. So I would have probably got my TQQQ back to 30% at this line. I would have been faked out for a little bit, for a couple of days, but then it would try it again, and I would do a rebalance again if I'm out of balance, and then from there, it would kind of take off, and I would, sell some to keep my balances in check. And what am I talking about when I'm talking about rebalance? Let's look at my portfolio for a second. So my goal is to kind of keep TQQ at about 30%. If it goes above, 35, 36%, I will sell it down, right? If it goes under, like 20%, I would buy it back, but only if this price is above this green line, right? So right now I'm in a waiting game, basically for this price to get back over the green line. And while I'm waiting, you'll see that TQQQ and UPRO are basically only like 29% of my portfolio. A lot of my money is sitting in MVRXX, which, if we click a look at this, is earning 5.20% on a 7-day current yield, as well as I have this Goldman Sachs CD, which was 5.4 for the year, and it gives me maybe like $4 and something cents every month. And I put a little bit in this Bitcoin ETF just because I don't know where Bitcoin is gonna go. So I put 2% of my account in Bitcoin, and this is kind of where it's at right now. All right. So this is how my portfolio currently is allocated, and once we get back above this green line, I will likely move some of this cash in this MVRXX out to rebalance this TQQQ to 30%. All right. A lot of my money I keep in the cash, as I said before, and this is my safety position. So as the market continues to drop, this doesn't drop. This sits here and earns the 5.2%, 5.4%, similar to what a dividend stock would do. So I'm having kind of the best in both worlds, whereby I have something that accelerates very quickly to as we go up. It accelerates going down as well, but my safety is really in these interest earning positions, and I'm earning 5% while I sit and wait for, once again, this blue line to cross back over to this green line. Okay, so what does that look like from a performance point of view? So here's what it looks like year to date. 9.7% for this allocation versus S&P 500 of 12.09%, and the Nasdaq 100, which at the end of the day, what I'm trying to do is to have better returns than the Nasdaq 100 over a 3-year period. That is what I'm trying to accomplish. Okay, so as the Nasdaq 100 went down minus 4.76% this month because of all of the cash and so on, my account only went down minus 4.52%. Right. So you look at this chart and you can say, okay, yes, you are slightly above the Nasdaq 100, but the S&P 500 really is kind of like kicking your butt here with this percentage increase. Right. My goal is over a 3-year period. I haven't been doing this for 3 years as yet in this account. It's probably only been just over a year. So if I look at a year, when you put in what happened last year versus this year, you'll see that my account is 21% versus a S&P, which is 19.4%, and Nasdaq 100, 20.73%. So basically, over the last year, my account is doing exactly what I want it to do. Right. If I expand it to 2 years, let's see, I have some catching up because there was a period of time where the Nasdaq 100 really accelerated, and that was not a period in which I was active. So this would be, I'm not sure, this is 2023. For this quarter, June, it really accelerated. Right. Over a 3-year period, you'll see kind of close. All of these missing months, basically 21.78% versus 21.64 versus 23.27. All right. So I'm showing this again because this whole allocation was created in order to get some of the best of QQQ without having to deal with the fallout when this happens. And it always happens, right? Last time was earlier in April 2024, and this is healthy. This is healthy for the markets. This happened in November. If I go to a 5 year plan, 5 year timeline, you'll see a lot of stuff happens all the time. Right? It might not look that dangerous now. This one was what? This was back in COVID. It doesn't look that dangerous, now that we look at it historically. They just look like little bumps along the road. But as you're going through it, you can actually feel the pain going through it. And at the end of the day, we're going to come out of this okay. So the goal is not to be scared away by what is happening. Just understand that, the way that you set up your portfolio is designed to navigate through these storms. And you just have to stay disciplined through it. So that is all I have for today. Happy Sunday, and hopefully this week is a good week. And that's all I have for now. Thank you.